Hello and welcome back to my channel. This video is to help you practice in answering some exam questions. Also, hopefully to help you understand the relationship of purchases returns, and discounts received from each other, because they could be as confusing as the credit sales in transferring to the general ledger. This is the first question. The totals from the purchases daybook will be transferred to the general ledger. So these are the totals. Letter A, what will be the entries in the general ledger? So we will find out the account, amount, and either debit or credit. Let's check which daybook we are transferring from, and it's the purchases daybook where we recorded our credit purchases. First, the total of the total or gross column will go to PLCA, or Purchases Ledger Control Account. Why? Because this is the total amount of our payables, or the amount that we are going to pay to our suppliers. Next, the total of the VAT column will go to VAT account, and last, the total of the net column will go to purchases account. Then let's transfer the amounts. Then let's find out whether they either go to debit or credit. Let's analyze the PLCA first. PLCA is a liability account, and when we make purchases, our PLCA increases, so it goes to credit. Let's analyze purchases next. Purchases is an expense account. So when we make purchases, it increases, so it goes to debit. And last is the VAT. It just goes with the purchases, which is debit. Next, letter B, what will be the entry in the subsidiary ledger? So we are going to answer the type of subsidiary ledger, either receivables or payables, and either debit or credit. Our daybook here is purchases daybook, so the type of ledger we are going to enter is the payables ledger and not the receivables. And we should always enter to the same side where we entered the PLCA, which is credit. So again, my personal advice in answering this type of questions is to read the question several times, find out what is being asked for, and always check what are the details given. Like in this example, it's purchases daybook. Also, in answering the entries to the general ledger, I've said this before, that do not jump to conclusion. When you enter your answer, always ask yourself the question, why? And you may often hear me say this, or why this should be the correct answer. It is because it's important to analyze your answer, and I advise you not to memorize any entry, because that could be more confusing. Next, we have two more questions. It's transferring from purchases returns and discounts received daybook to the general ledger. Just like what we did in the previous video, in answering these practice questions, we will use a diagram. So this whole pie represents the purchases plus VAT, and this black slice here represents the purchases returns plus VAT, or discounts received plus VAT. I put them together in one slice because their effect to our purchases is just similar. Once we have taken this slice out, our pie is much smaller. It means our purchases are much lesser. It also means that the purchases returns and discounts received decreases our purchases. You may also notice that the VAT always goes with each one of them. So let's go back to the questions. Number 2, the totals from purchases returns daybook will be transferred to the general ledger. And these are the totals. Letter A, what will be the entries in the general ledger? First, let's find out the accounts. First, the total of the total or gross column will go to PLCA. Why? Because the purchases returns also affects our PLCA, or the amount that we are going to pay to our suppliers. Next, the VAT column goes to VAT account, and then the net column goes to purchases returns account. Why? Because remember that this is from the purchases returns daybook. Then let's transfer the amounts. Then let's find out whether they either go to debit or credit. First is the PLCA. Purchases returns also affects our PLCA, or the amount that we are going to pay to our supplier. So let's analyze. PLCA is a liability. When we have purchases returns, we no longer have to pay this amount to our suppliers, so it means our PLCA will decrease. When a liability increases, it goes to credit, but this time it decreases, so it goes to debit. Now let's analyze the purchases returns next. Looking back to our diagram, the purchases return is here, and its effect to our purchases is it decreases our purchases, which is an expense. When an expense increases, it goes to debit, but the purchases returns decreases our expense, so it goes to credit. Last is the VAT. Let's go back to our diagram. And as you can see, the VAT is attached to each one of them. Wherever which side they go, the VAT goes with them. So since our purchases returns account goes to credit, the VAT goes to credit as well. Next, letter B, what will be the entry in the subsidiary ledger? The type of subsidiary ledger will be payables, because purchases returns affect our payables and not receivables. And they always go to the same side where we entered the PLCA, which is debit. Now let's go to the third question. The totals from the discounts received daybook will be transferred to the general ledger. Sometimes discounts received and discounts allowed can be a little bit confusing, and I totally understand why. So how would you differentiate them from each other? Which one affects the credit sales and which one affects the credit purchases? First of all, always keep in mind that we are looking at the company's point of view, and the company is either buyer or seller. I have discussed this in the previous video, and I will put the link down below. The second thing that you have to remember is when it comes to prompt payment discount, the only party who can give the discount is the seller, not the buyer. So if you see the discounts received, it means our company was given the discount by the seller. So it means our company is the buyer. It also means our company is the one who made the credit purchases, and we have received discounts from those purchases. On the other hand, the discounts allowed means we, the company, allowed the discounts or gave the discount to our customer. So it means we are the seller. So let's go back to the question. These are the totals from the discounts received daybook. Letter A, what will be the entries in the general ledger? Let's find out the account's amount and either debit or credit. First, the total or gross goes to PLCA, the VAT goes to VAT account, and the net goes to discounts received account. Then let's transfer the amounts. Then let's find out whether they either go to debit or credit. First, discounts allowed also affects our PLCA, or the amount that we are going to pay to our suppliers. So let's analyze. PLCA is a liability. When we receive discount, we no longer have to pay that amount to our supplier, so it means PLCA will decrease. When a liability increases, it goes to credit, but this time it decreases, so it goes to debit. Let's analyze the discounts received account next. Looking back to our diagram, the discounts allowed is here, and its effect to our purchases is it decreases our purchases, which is an expense. When an expense increases, it goes to debit, but the discounts received decreases our expense, so it goes to credit. Last is the VAT account. Let's go back to our diagram, and as you can see, the VAT is attached to discounts received. So if discounts received goes to credit, the VAT goes to credit as well. Next, letter B, what will be the entry in the subsidiary ledger? The answer here should be payables, because discounts received affects our payables and not the receivables. And we should always enter the payables to the same side where we entered the PLCA, which is debit. Now we are done answering all the questions. Next, let me give you the same tip as I have given from the previous video. This time, it's about why the payables are recorded in the same side where we recorded the PLCA. This is also something that I have learned from the next unit, which is the principles of bookkeeping controls that I wish I've known while studying Introduction to Bookkeeping. And the reason is, it's because PLCA is the record of the payables from all the individual supplier. So when we add all the individual suppliers' account, the total should be equal to the PLCA. Another tip is about PLCA, or Purchases Ledger Control Account. Let's take a look at the PLCA in the general ledger. PLCA is a liability, so the credit entry increases the PLCA. The only time it increases is because of the purchases. So we only have purchases in credit. Everything else following that reduces it, and it goes to the opposite side, which is debit. And they are the purchases returns, discounts received, and the cash payments made from our bank. And before I end this video, let me just summarize my personal advice. First, read the questions several times. Find out what is being asked for and check all the details given. Second, do not jump into conclusion and do not make any shortcuts in answering the questions. Third, analyze everything and as much as possible, avoid memorizing the answers because that could be more confusing. And that's it for this video. I hope you find it useful. If you want to watch more videos like this, please don't forget to give us a thumbs up and subscribe to our channel. Thank you for watching.